All right, what's going on, family? This is Paul McMillan II, and welcome to another live New York session. And so this is June 21st, 2022. What we're going to do is we're on Ford's Factory. We're going to check the news. So the New York session is going to be starting at 8 o'clock. And looks like the CAD, the Canadian dollar, is going to be on some news starting at 8:30. It's going to kind of go back and forth until about 10 o'clock. I'm sorry, till about 10 o'clock. Yeah. Well, probably by maybe 9 o'clock, the CAD will be okay by then. So what I'm going to mark up today is the Gbpcad pair. Very first thing we're going to do is mark up from the 15-minute time frame to the 4-hour time frame. So what I'm going to do is go all the way back in price as far as I can, so that way I can see what price did in the past, so that way I'll know what it more likely will do in the future. So give me a second here. All right, so this is as far back as price goes. So we're going to put a vertical line. Very next thing I like to do is, like I mentioned before, market structure based off of institutional liquidity. So what I mean by institutional liquidity is actually areas where the banks have consistently respected these areas and made their big moves off of those areas by gathering liquidity. And when you understand how the banks move, you'll kind of understand that, you know, before they make their true move, they love to gather stop losses off of retail traders and gather liquidity that way. That's the reason why sometimes as a retail trader, you may try to get into a move and they may try to fake you out because they want to knock you out the trade and gather that liquidity, because the more liquidity that they gather, the bigger the move that they can actually make when they trade our money in the market. So that's why understanding institutional trading is important, because then you'll be able to determine when the banks are trying to make their moves and get into those moves to where they're more consistent and more profitable. So what I'm going to do is, now that I marked up my market structure, I'm going to draw my zones right behind those. That way we have an idea what price are, what price are at when it comes to these zones. Some of these zones I might be a little bit too close. Look at this one. I could probably do without. I'll clean this up. Yeah, this is probably good. So now I'm going to move on to the 30-minute time frame. So of course, this is as far back as the last vertical line was. So now we're going to mark this up here. Vertical line there. And then I'm going to mark a market structure here. So I can say maybe this is a good area. It's a lot of liquidity that was respected here. So I'm going to make this green. I think I might make this up a little bit more. Yeah. And then I'm going to draw my zones here. And make these green as well. There we go. Now, I'm going to move on to the 1 hour. So now with the 1 hour, the vertical line here, going to make this red. Vertical line. So I'm marking up these areas here. Start marking up that. And, you know, I try to make these zones as perfect as possible. You know, just areas that I can see where price is really, you know, expecting this area kind of like up here. Really respecting that area. Then I'm going to actually just mark up these zones here. Then I'm going to go to the 4 hour time frame. Now I'm going to move on to the 4 hour time frame and do the same exact thing. So at this point, whoops. At this point, we're probably very close to current price, which is right here. And then I want to finish marking this up. I just want to mark this area, mark this forward here. But once I get back to the 15-minute time frame, then that's when I'm going to, you know, figure out, you know, exactly what the test lines I'm going to draw, so on and so forth. But it's good to just mark up this market structure so you can see what current price is at, and then kind of make your sniper entry. Now that I did that, going back to the 15-minute here. Now that we have done that, so you can see that we really marked up some good zones here. Pretty good. So now we're at the 15-minute time frame. So now the very second step that I take is figure out what is the current trend in the market. Well, when we look here, we need to zoom in just a little bit. So when we look at the current market, you know, the market is either going to trend into a downward motion or upward motion, or it's going to consolidate. The banks were closed yesterday, so price pretty much consolidated. You can see it. Scribble. It almost like, you know, your 5-year-old child, you know, scribbling in the coloring book. So in this situation here, we can just say, you know, I'll probably just say consolidation in this area. So I'm going to kind of point down to here. Say, market. Consolidation. So that's going to equal say breakout, an official breakout. That's what we're going to want to wait for. So now that I'm going to be waiting for a breakout, because even though price look like it's kind of trending in the downward motion, but it's still consolidation. So now what I do is turn on. So then I'm going to turn on my higher high and lower low risk strategy indicator. And so then I try to look at the most recent high, most recent low for breakout. So if I'm looking for an official breakout, I'm probably going to look at this high here. If price breaks out in a buy past this line, then it's probably, a confirmed breakout. And then if I want price to break out for a sell, then I'm looking for here. Now I might adjust that as time goes on, but that's probably what I'm going to be looking for. Matter of fact, I might just see if price can break out here. Sell. So now that I drew my break and retest lines, the next thing I like to look for is I like to turn on my supply demand indicator. The reason why I like this indicator is because it's going to let me know imbalance gaps in the market. So when we're talking about imbalance gaps, this is when the institutions put a lot of liquidity in the market and make price shoot up really, really fast or dip down really, really fast. And as a result of that, it results in them profiting big money, but it also profits them big losses when other orders aren't filled. So when you even look at this move here, there's a lot of sell orders that didn't get filled, so they were in the negative as well. You know, they made a massive amount of money with this buy move, but a lot of these sell orders needed to be, mitigated in order for them to make their money back. And you can see they kind of mitigated this area here, but they still have all this area to mitigate as well. So eventually they're going to get all of this here. They have to make their money back. But we also move this here. I'll make this smaller. Yeah, there we go. Save. But there was also a lot of, there was an imbalance move up here as well, which if you look back, that was caused from all of these moves down here. So they're going to have to fill this eventually as well. So the $1 million question is, turn this off and try to fit the screen. See it. So now the $1 million question is, which imbalance are they more likely going to fill first? And that's why this breakout is important, because if price does a confirmed break and retest here and goes up, and we know that they're trying to fill this imbalance gap here to make their money back because they have to. But if you get a break and retest down to here, then you know they're going to try to mitigate this area here. So now the question is, which way do they want to go? And then if they go that direction, we're going to catch that move, because that's going to be a real strong, consistent move for us. So then what I'm going to do is set my risk to reward tools. And I try to get at least a risk to reward of 1. But I'm probably going to put my stop loss maybe up here. But as soon as price break and retest this line and they go down, try to fill this order, it's a very low chance that price is going to reverse up and go the other way. But they got to make their money back first. That's my analogy. So my goal is to get at least, 50 pips on the first take profit, maybe 55 pips, if I can get that. So that's going to take profit 1. And then I'm looking for them to at least maybe fill this imbalance gap here. It's probably going to take profit 2. And then if price goes all the way down here, then I'm looking for it to reverse down there. So that's for if price sells. Now, if we get a confirmed breaking retest for the buy, then I'm probably looking to put my stop loss maybe here. Maybe like up to down here to this high here. And then, like I mentioned before, my goal is to get 55 pips. Usually it's 20, but 9 times out of 10, if the banks are trying to fill these orders, mitigate these orders, and they're going to really push price up for the most part. This is going to be the second take profit. You still got the zone up here. So, you know, I just think that, you know, drive price all the way to the zone, but we'll see. So that is my thought process. So then what I'm going to do is label these take profit zones here. One is going to be yep. Now the very next thing we're going to do is set my launch for this take profit zones to move on to the next step. In a few minutes, the New York session is going to be open. So we're going to try and see what price does. So we pause this recording to do that. All right, so now that I set my alarms for my take profit zones or breaking retest zones, we have about a minute before the New York session officially opens. So the next thing I want to do is just turn on the Delorean EMA indicator. Now, I use this indicator as extra confirmation on top of any analysis I do. So that means the New York session is officially open. Hold on. So, yep, I turned on my kill zone indicator. Yep, the New York session is officially on. So with this Delorean EMA indicator, usually when the yellow EMA crosses the red EMA, and it's either above or below the 50 EMA, then it lets us know that it's either a strong trend or a strong candle forming. So that's why this is my favorite EMA indicator, because it gives me all the confirmation I need in order to know exactly what more likely price is going to go. So if price breaks a retest this here and the yellow EMA crosses the red EMA and is below the 50 EMA, then that's probably a very strong sign for a strong downtrend or a bearish trend. And then vice versa, if price breaks a retest above here and the yellow EMA crosses the red EMA and is above 50 moving average, then it's usually probably a good buy confirmation. So now we'll see what time Gbpcad decide to make a big move. What I'm going to do is for last resort, is I'm going to actually place my rules. So my rule is that I usually wait until between the 8:15 candle and 12 p.m. candle, see what price is going to do. I don't like to jump into trades when the market open because I want to avoid fake outs. So typically when price breaking retests, I need to see a clean candle close below, and I need to see momentum before I get in, because you can easily get faked out by the institutions if you're not careful. we're going to pause the recording. We're going to see when price decides to move. And we'll see what happens. So what I'm going to do is pause this recording, and I'll be right back. All right, so we have a little bit over a minute left before the news kick in. It's going to kick in at 30. Gbpcad is going to be on some news here. So let's see what price does. See what happens. Stay tuned. All right, so we have about 7 minutes into the 8:45 candle. Looks like it might be selling, but we want to wait for an official breakout from the Asian low here before we even consider selling. So we'll wait and see. All right, so now we're at the 8:45 candle. The news probably might still be on, or it might have stopped. But now we're going to figure out what price is going to do next. Let's see what happens. All right, now we're at the 9 o'clock candle. So of course, we're going to wait until the 9:30 bell to see where price really wants to go. That's when the liquidity really sets in. More likely, we're probably bearish at this point. That's what it's looking like. But we'll know for sure the 9:30 bell. Probably won't make solid entry to the 9:45 bell just to be sure that price is breaking and retesting and confirming everything down. So 9:45 is going to be it. So let's see what happens then. All right, so now we're at the 9:15 candle. So we have less than 15 minutes before the 9:30 bell. So pretty soon we're going to really figure out what the institutions are trying to do with this pair. So we'll see in about 15 minutes or so. Really, I'm probably looking for an entry around 9:45 to 10 o'clock. So we'll see. So we got less than a minute before the 9:30 bell. You know, wouldn't be surprised if price bought up. This might be a bullish flag. Could be wrong. But we're about to find out officially what price will go. We'll see. Once we get about 15 seconds, I'll resume this recording. Be right back. So we have about 10 seconds before we figure out what price is going to do. 5, 4, 3, 2, 1. So like I mentioned before, 9:30 bell, the 9:45 is when I'm probably going to make an entry. Probably know by then. So we'll see. Give it another 14 minutes. See what price gets really close to, whether breaking this area or this area. Then that'll kind of determine what price probably more likely will go.
Man, come on.
All right, guys, so we are at the 9:45 bell. Price still hasn't moved yet. Something tell me it might go bearish, but we'll see. We will just have to wait and see what it decides to do. We'll keep you guys updated. All right, so we're about to hit the 10 o'clock candle. So we got 10 seconds left. I don't know, I think price might be starting to drop now, maybe. So, let's see. This is officially the 10 o'clock candle. Price is still choppy. It looks like it was going to drop, but we'll see. All right, price is probably dropping. So if this candle club passes the white line and closes below, or if it keeps up the momentum, I'm going to go ahead here for a sell and see what happens. But I want to make sure I don't get into a fake out. So let's see. Right. Let's wait and see if it crosses this line and catches some momentum. Might be doing that. Caught in fake out, so let me wait. See if it holds. So I don't see a wick developing. So yeah, it looks like it's pushing. Now I see a wick. Yep. Well, is that wick going to disappear or is it going to retrace a little bit? It pushes a little bit more. See it push just a tad bit more because I see a wick there. Let me pause this recording, then if it pushes, then I'll resume. All right, looks like price is pushing down a little bit. So let's see where I'm at. So I'm in the sell now. Really pushing down. I'm liking this. It is dripping. Let's see. Liking that drip. Liking that drip, drip. Let's go. There we go. All right. So now what I'm going to do is trail my stop loss. Just modified my stop loss. So now what I'm going to do is I'm going to show you how much I profited from that. Stop sharing my screen here because I'm practicing for the Funding Trading Plus challenge. So just in that short amount of time, $272 profit. So of course they took a lot of taxes out of that. So $215 profit, which is not bad. My second trade is still going and I trailed my stop loss. So that way if it stops me out, it'll stop me out in profit. Now let's go back to the main screen here. It's really, really dropping. So we want to see if it keeps on holding on. It keeps on dropping. So let's see, we're talking about a $215 profit. 215. It's really, really dropping. So I'm liking this. So if I can give me another 40 on this, that would be perfect. Now price continues to drop to the profit I wanted. Then I'm gonna trail it even closer. As you can see, I profited $215 off of this.
Boom.
Well, yeah,
Boom,
215. So that's not bad. You can do the math. $215 times that by 5 days, times that by 4 weeks, $4,300 a month. Not bad.
Solid, bro. Solid. That's solid.
The price is dropping even more, but I'm not going to jump in because I done made my money. How many pips was that when I made that money? Like what, 16 pips? Imagine that thing really drops. So I'm about to document this. This is the first one for the day. Because if I do this, if I keep on making this, like hitting targets like this, like between 200 and 300 a day, 10 days straight, well, no, I'm gonna say, yeah, probably 5 or 10 days straight, then I'm gonna go ahead and just take that challenge and get started.
You said what now?
I said, if I keep on doing this for 5 to 10 days straight, then I'm just go ahead and pay for the challenge and get going.
I like that. I like that. Yeah, I like that, big dog. Don't take that challenge.
That thing dropped, boy. Let me go with my play demo. My Hugo's way and drop on this one. This thing dropped.
That's Gbpcad.
Yep.
Trouble on the call. Trouble on the call. Let the chick get an attitude. Trouble on the call.
I think I figured out a new strategy for binary too. I found this indicator. It's pretty dope. I might do a little binary after this. You up for it? All right, y'all. So I'm gonna go ahead and wrap up this session because I made my money. The Gbpcad drops. Boom, boom, boom. Loving it. All right, guys. See you in the next session.